Good afternoon and welcome to India Today. I'm Anjali Istawal. Let's take a look at the top headlines of this hour. Yamuna river level continues to surge. Water level crosses evacuation mark. Several people move to relief camps. Delhiites brace for the worst. Schools shut in Noida and Ghaziabad. All eyes on key GST Council meeting. Two-day meet to discuss GST reforms. GST decision implementation soon. No waiting till Navratri. It's Congress versus Congress Nataka, which rages on. Sacked Neta K.N. Rajanna loyalist hit out at DKS camp. Rajanna camp alleges DKS conspired against him. Big CAA relief by Modi government. Persecuted Hindus, Sikhs, Christians, Jains and Buddhists who fled to India till 2024 will not be sent back. Donald Trump faces fire for tariffs on India. Modi, Xi, Putin, Bonhomme rattles US. Former US officials blame Trump for the drift. Union Mantris big claim on trade deal. Piyush Goyal says trade deal by November. And breaking news coming in right now, actor and producer Dulquer Salmaan has apologized. He was facing the heat for a dialogue in his upcoming film. There was outrage over a demeaning dialogue which was targeted at Bengaluru women. So now he has apologized for this dialogue. The dialogue said that there was a reference to women being characterless, and this is what he has apologized for. The dialogue said that the character goes on to add that he won't marry characterless Bengaluru girls, and this created a furor in the film industry and amongst the common people and the social media, and now he has issued a public apology after criticism over this controversial dialogue. This was a Malayalam film. It's called Loka Chapter 1, and the film has been accused of portraying women of Bengaluru in derogatory light. Joining us on the phone line is Sagai Raj. Sagai, do tell us about this film, and it seems Dulquer Salmaan has apologized.
Absolutely. Dulquer Salmaan is a producer of this particular movie called Loka, which has heard the sentiment of Kannadigas, where one of the statements was defamatory and trying to demean the women from Bengaluru, and where one of the characters calls women from Bengaluru are characterless. And this particular dialogue did not go well with the activists as well as the locals here in Karnataka, where they have criticized and also threatened, saying that they will not allow the screening of the movie in the state if they continue with this particular dialogue. And thereafter, the producer has apologized and also promised to remove the dialogue from the movie.
Right. Is this the first time that Dulquer Salmaan has been in a controversy, or we've seen some earlier controversies as well, Sagai?
If you notice, Dulquer Salmaan is not someone who gets embroiled in the controversy. This is something new, and here in this movie, he is just a producer. The director and the actors have come under scanner for this particular dialogue of the movie. And however, his production house has apologized and also promised that they will remove that particular dialogue from the movie.
Okay, so quite shocking there. A dialogue not expected out of Dulquer Salmaan, a film which he has produced, although he's not the character in the film. Do tell us about it, Sagai. What is the character? What is the situation? Why would a dialogue like that be made in a film? Can you tell us a little bit more about the context?
So if you notice that the character of this particular movie who plays as a cop, who says that when he meets a woman in the interrogation, says that she is from Bengaluru. That's when he says that he doesn't want to get married to a woman from Bengaluru, and according to him, the women from Bengaluru are characterless. And this particular dialogue did not go well with the people, especially the activists who have opposed on social media and criticized the makers of this particular movie. And subsequently, the producer of the movie, Dulquer Salmaan, has apologized on his social media account and also promised that he will remove that particular dialogue from movie Loka Chapter 1.
Okay. Thank you, Sergey, for all those details. So, Dulquer Salmaan has said that the dialogue will be removed from the film. The film was accused of portraying women from Bengaluru in a derogatory light. The controversy arises from a scene featuring Inspector Nachiappa Gowda, played by choreographer turned actor Sandy. And in this sequence, the officer declares that he would never marry women from Bengaluru, labeling them characterless. And the character is depicted as a misogynistic policeman who frequently engages in moral policing throughout the film. So it sort of sits well with his character, but Dulquer Salmaan has come out and apologized for it. And now let's go across to Sakshi Batra of Business Today with all updates of the market in our all-new show. Sakshi, over to you.
Thanks a lot, Anjali, for that. Well, good afternoon and welcome to Market Closing on our brand new collaboration between Business Today and India Today Television. It's been a day packed with action on Dalal Street, from global market cues and policy signals to earnings, sector trends and stock-specific moves as well. We are here to bring you the full picture of how the markets performed and what it means for your money. So stay tuned as we break down the Sensex, the Nifty and the stories shaping tomorrow's trade. And don't miss the market opening show tomorrow as well at 9 a.m. with Abha Bakaya giving you the first word on everything that will move the markets. Let's first take a look at what's really hot in the corporate and the financial space. After a choppy start, markets rebound to trade near the day's high point. Nifty up by 100 points at 24,700 odd mark. Sensex rises 300 points to 80,400 as metal stocks shine, with autos, pharma and also leading the rally. The 56th GST Council meeting is now underway in New Delhi, chaired by Finance Minister Nirmala Sitharaman. In an India Today exclusive, Prateek Chen from PwC India hints rates could drop early, offering consumers relief on daily essentials. Maruti Suzuki has launched its new SUV, Victoris. The company plans to roll out 2 more SUVs in FY26. Victoris comes with 6 airbags, a 5-star safety rating and an underbody CNG tank, and will be offered in petrol, CNG and strong hybrid variants as well. Maruti also plans to export Victoris to over 100 countries. After Swiggy has raised its platform fee to 14 rupees, it is Zomato that has hiked its fee to 12 rupees now, right ahead of the festive season and the Asia Cup, aiming to boost profitability. After powering GDP growth to a 5-quarter high of 7.8%, India's services sector has now soared to a 15-year peak in August on the back of strong demand. Let's head straight to the market cues then. In the last 20 minutes of trade, well, the Nifty is currently hovering above the 24,700 odd mark. Near the day's high point, you can actually see a 0.5% uptick that's coming in. Support is coming in from all the sectors, barring the IT sector, at least for now. Metals are shining the brightest with 3% gains coming in. Also, when we look at the pharma stocks, they're also rallying pretty much sharply, over 1% gains coming in for the Nifty Pharma Index as well. Even within the banks, banks, the banks that are owned by the state, the government, those are the PSU banks that are riling in trade today. Almost 1% of gains coming in from the PSU banks as well. Let's talk about the broader markets, the mid caps and the small cap stocks. Those are the ones, the indices that are also outperforming at least for now, with 0.8, 0.7% gains coming in from there as well. The banks that were so far lagging in the first half of trade have actually pushed up the markets in the recovery zone as well. Look at the private banks, look at the financial services. These are all the sectors that are buzzing. Let's talk about the top gainers on the Nifty in the last half an hour of trade. You see Tata Steel, Hindalco, JSW Steel, all the three counters from the metal space that's shining bright. Also Coal India for that matter from the PSU space. We also have Indus Bank from the private banking space that's higher in trade. But what is lagging behind in this market? IT stocks are clearly declining in trade. Infosys is the top loser, 1.3% lower in trade. Pack with it, even TCS that's down by about 0.5%. Even the fast-moving consumer goods companies, all of those companies that sell you daily essentials, the names like Nestle, HUL, that's Hindustan Unilever, that's also down in trade. So those are the stocks that are declining. But let's also see on the futures and options side, you have Piramal Pharma, on Tata Steel. All of these stocks are also buzzing a lot in trade. But the top movers from the Nifty 500 basket, you will spot a lot of names there as well, including Ola Electric. That's been consistently seeing the moves and is another 9% up in trade today. Let's now go across to our guest now, Mr. Sharad Avasthi, the head of research at SMIFS, joining in to share with us what is next for the stock markets ahead. Warm welcome, good afternoon to you. Sharad, thank you so much for taking the time out. I want to first understand from you, how are you looking at the markets? We did get some support from the GDP numbers that came in on Friday evening. That pushed up the Nifty higher all across this week. There was some slippage yesterday. We gave up some of gains, but yet again, we are now looking at domestic cues. After GDP, it's the GST Council that's going to be sharing with us some fueling of support as far as the market sentiment is concerned. How are you looking at the markets? What's next?
Yeah, I think these are the two big cues that you're looking at. There were some concerns, regarding how the GDP numbers would pan out. But I think they were better than expectation, and no one was expecting such a sharp pullback. So I think that's been one positive. And beyond that, I think now this GST rejig is something that should have that had to happen sometime. And I think the whole objective of having GST was to have lesser number of rate brackets. And in the initial phases, the government has gone ahead and helped the states to overcome the challenges there. But now this space needs to be broadened, and we need to have a much simpler structure. That was the whole objective of having GST. So in case they can pull it through with less of opposition from the states, I think, and with them being less demanding regarding, covering up for the losses that they incur, I think then it would be a very boom thing for the markets.
Absolutely. So Sharad, also help us understand, at the time when the markets are recovering, we are also seeing the other asset classes like gold and silver for that matter also hovering at record high levels. How are you advising your clients to invest at this moment? Should they invest with the equities at this point? Is there more room for there to grow? Or do you think even at record high levels, one should invest in gold and silver?
Particularly with gold and silver, we largely have a strategy where we want to only invest into these precious metals when we think that the markets can collapse big time. And I don't think that the markets have a very big collapse in the near future. So in that case, we would not we would not want to speculate, on gold and silver prices, because unless and until there is very big global uncertainty, I don't think they are going to rally further. Though the environment over the last 1.5 years has been very conducive for gold prices. You have doubts about the dollar, you have a lot of central bank demand also, and then it is followed up by speculative backup. So I think all that is playing out very well for gold. Globally, we have had uncertainties regarding a lot of issues. But if you are an equity investor, I think the largest strategy that we follow is, to largely be bent towards equities only. We don't think these are sky high peak valuations. So high probability that most probably equity would outperform over the next 6 to 12 months. So stay in equity once we develop a stage where we think, that maybe equities cannot go up further or may correct substantially. That is the time to switch to gold.
Right, so 6 to 12 months, it could be stocks or stock markets, equities that could outperform gold or silver. But let's try and understand now with respect to GST. 19 days after Prime Minister Narendra Modi's Independence Day promise of a festive season bonanza, speculation is rife that the GST Council could push for an early rollout of the rate cuts, possibly from September 5th onwards. Here's more on that.
इस दिवाली में आपको एक बहुत बड़ा तोहफा देशवासियों को मिलने वाला है। हम नेक्स्ट जनरेशन जीएसटी रिफॉर्म्स लेकर के आ रहे हैं। ये दिवाली के अंदर सामान्य मानवी की जरूरतों के टैक्स भारी मात्रा में कम कर दिए जाएंगे। रोजमर्रा की चीजें बहुत सस्ती हो जाएगी और उससे इकोनॉमी को भी एक नया बल मिलने वाला है।
19 days after the Prime Minister's Independence Day promise of a festive season bonanza for India's middle class, the GST Council is meeting to finalize the contours of this windfall. While consumers are eyeing the goodies they may soon get, economists are weighing the festive season boost these tax cuts could deliver to the economy. Now, Business Today TV has learned that the centre and states may work to ensure that the benefits of the expected rate cuts are passed on immediately.
I think, look, this will happen soon. Now, whether it will happen on 21st of September, one is also hearing that it could happen midnight on September 5th itself. That, of course, the council will decide, but it's very clear that it will happen within next few days. In let's say next 10 days or so is expected, and I will not rule out the possibility of it happening from midnight on September 5th as well.
The buzz around rate cuts is unmistakable, but industry voices and economists caution that anticipation itself could delay purchases, especially in the run-up to the festive season, stalling sales before the benefits materialize. There are already reports of buyers postponing decisions, particularly for big-ticket items, waiting for lower GST rates to kick in and bring savings. Sources indicate GST on small cars and two-wheelers with engine capacity up to 350cc could be slashed by 10%. Air conditioners and televisions are also expected to get cheaper. A reduction in GST on cement could ease construction costs during the festive period. Several other products, from fertilizers and pesticides to packaged dairy, textiles and footwear, may also see cuts. Everyday FMCG products too are reported to be under consideration.
Now what we're hearing is that even a lot of FMCG items under 18% could also come down to 5%, and that could mean toothpaste and shampoo and sort of hair oil and so on. And that's really the big one, right? I mean, for the common man. So it seems like we are heading for a big bonanza for at least you and me.
Meanwhile, a State Bank of India research report demolishes the belief that states will lose revenue under the new GST regime. The report projects states will remain net gainers with GST revenues, including devolution, estimated at over 14.10 lakh crore rupees this fiscal. While there may be an immediate dip of 3 to 4% in month-on-month collections, revenues are expected to rebound, sustaining 5 to 6% growth each month. The new GST regime, officials say, will also broaden the tax base, simplifying compliance, cutting red tape, and encouraging greater voluntary participation. Bureau Report, Business Today TV.
And let's straight away go across to my colleague Karishma Sudani now, who's been getting us all those scoop and exclusives from the GST Council and what are the big expectations there. Karishma, hi, good afternoon. The beginning of the GST Council meeting since morning, what are the discussions that have taken place so far? And what we want to understand is whether states are actually coming together with consensus on some rate cuts now.
Good afternoon, Sakshi. Thank you. To begin with, I'd like to definitely address the fact that Andhra Pradesh Finance Minister, before entering the meeting, had shared that most states, in all likelihood, there has been a consensus since their GOM meeting on the fact that they support Centre's proposal on rate rationalization. Now, it's a two-day meeting, and definitely we are expecting there is going to be a smooth transition of approach in these discussions. Sources have hinted that currently discussions are underway on studying the rate rationalization structure, which has to be the key crux of the meeting of 2 days, which will bring down the whole GST regime to just two rates of 5 and 18%, and with a special rate of 40%. Two big challenges definitely which could likely be introduced by today evening, discussed in the meeting, would be on the revenue deficit that the states will suffer because of this, and if the center has a thought of a method of how they are going to convert that revenue deficit into some kind of bearing. And secondly, states' proposal of putting an additional levy on certain tin goods, which will also be taxed 40%, plus if there could be an additional charge. I think as time passes, we'll be able to pick up more information on what approvals and consensus has come in from the members.
Absolutely, Karishma. Keep an eye out on that. We'll continue to get more updates from you. So thank you so much for keeping one eye out on as to what are the developments coming in from the GST Council meeting. Let's go across to Sharadji, who's been standing by with us. Sharadji, what sectors are you really looking at with respect to GST? That's one of the key questions that's also being asked by our viewer as well, Rahul Sharma from Bhopal, who wants to know which are the sectors that he should be now looking at to benefit from the GST rejig that's going to be coming in now.
Yeah, I think autos, both two-wheelers and four-wheelers, they should be benefiting out of this. If you look at the numbers that have come in even for last month, I think in spite of the fact that the announcement came in on 15th August, I think even prior to that, the earlier expectation that we had, that because of the tax cuts, etc., there could be a rise. So I think that has played out very well. So I think two-wheelers have shown the first round of traction. I think four-wheelers, commercial vehicles across the board, but largely, the passenger vehicle and two-wheeler space should show very good improvement. Consumer durables across the board should show very good improvement. I think the air conditioner companies could be one good place to bet on. Maybe you would have to extend your horizon beyond 3 to 6 months. But that should play out very well. We have seen a decent bit of correction there. So I think across consumer durables and auto, two-wheelers and passenger vehicles, that space looks very good.
Okay, so those are the sectors that look very good. But on the flip side, there's also an expectation of, higher taxes on sin goods and also extreme luxury at that matter. Karishma was just talking about some of the sectors that could attract a 40% and probably an additional surcharge as well. So we'll have to look at what are the final decisions. But so far, what we're given to understand is that tobacco could be taxed heavily as well. Right now with a 28% plus a cess, there could be an uptick to 40%. So I want to understand, what about the tobacco sector that you're looking at? Companies like ITC, which draw their major revenues from cigarettes for that matter, names like Golden Tobacco, Godfrey Phillips. How are you looking at these stocks, especially for ITC? Last 2 years, we've not seen too much of a return coming in for the investors at large. And when there is a GST taxation shift, and that too on a higher end of 40% or so, what could be the impact on such tobacco companies?
Sakshi, the first thing is, that these companies usually have not been impacted by higher tax rates. The consumption is in such a mindset actually that higher tax rates don't really deter consumption. Maybe you have a lot of issue in terms of, the unregulated market going up and eating up a bit of your share. But I think in the current scenario, that also leaves you very little risk. And with the type of per capita income rise, etc., and urbanization we are talking about, I don't think there will be a material impact even if the tax rates are higher for cigarette companies. Not on the demand side, but certainly in terms of stock prices, on the sentiment side, there could be some short-term impact on tobacco companies. But long term, I don't think that, demand-wise, there would be any material impact because of higher taxes. And yeah, I think that's it. In terms of ITC, yeah, last 1.5, 2 years, not much has happened. The hotel demerger, etc., all that has happened. But I think, yeah, no, it's a diversified play. I would largely focus on the FMCG improvement that the company can clock in. And the cigarette business, could be the staple diet for them that would carry them forward. Fresh triggers would come in from the FMCG business, the way the company has been expanding. And if on that valuation front you look at, I think ITC probably is the cheapest FMCG stock that you can look at. So there might be some more room for ITC to grow. In case you get this 40% tax and there is some correction of 5 to 10%, that should be a decent place to add on to ITC.
Sure. All right. You know what we'll do is we'll try and understand this a little deeper on the impact of especially the US tariffs now and the proposed GST rejig. We've also seen Heritage Foods Executive Director Brahmani Nara, who said that dairy sector remains largely unaffected from the 50% duty of tariffs that US has imposed on Indian imports. Also, when we talk about the lower GST rates, that's likely to boost affordability, also increase volumes, and also enhance the ease of doing business. Let's listen in to that exclusive.
How does this 50% punitive tariff by the United States impact your sector and your company, if at all?
We believe that the dairy industry is largely unaffected at this point in time by any of these tariffs. Our Honorable Prime Minister has made it very clear, and he's been very firm, that he is here to protect the agrarian community in India, more specifically the Pashuposhak or the dairy farmers in India.
We're talking at a time when the Center State GST Council is considering very significant changes to the GST rate as well as process architecture. And I wonder if you had any thoughts about the sector that you represent from a GST perspective.
I think considering that most foods are assumed to fall under the 5% tax rate, I think it's certainly a welcome move. It gives a boost to essential consumerism within India while the economy is growing really well. I think consumer growth has fallen a tad behind. So I think this is great. And especially for dairy, it's amazing. It's a welcome move because it makes more nutritious products more affordable and accessible to the consumer across the country, especially products such as ghee, which are taxed at a much higher rate, and a lot of consumers, as a result of the high value of the item, are using cheaper alternatives for cooking or consumption. So it's a welcome move by us, and I think it's great for the company as well because volumes increase and our overheads in a low margin business get better absorbed. So and also our ease of doing business and the complexity of our accounting and other activities become better with just 2 rates of GST being available.
Absolutely. Sharadji, coming back to you, when we talk about this entire issue of US tariffs, there still needs to be some understanding that whether this 50% tariff is going to be staying till the fiscal year end or the year end, or is there going to be some kind of a breakthrough? Of course, we've been looking at some statements coming in from the Commerce Ministry. Mr. Piyush Goyal has also indicated that a trade deal could probably take place by November. So that's the hope that we are still hovering on as well. But when we talk about, the kind of statements that are coming in from the US, so far it looks that they are not ready to blink the eye. We've seen some statements that are coming in from Mr. Donald Trump's Peter Navarro, advisor, who's been, talking about tweeting a lot and has been talking about how, tariffs will be here to stay. And, he's been speaking against India quite a bit. Now, off late, in the recent tweets that he has done, he's in fact retweeted somebody else's post as well, where Jack Posso's tweet, where he has suggested that tariffs on even foreign remote workers should be in place. So far, we understand that the services had been out of the realm, and that could also be probably the reason why IT sector is also under pressure. Because despite the fact that rupee is on a all-time low level, which would have otherwise supported the IT sentiments, the sector is actually down in trade today. How are you looking at such statements that are coming in from the US?
Yeah, I think certainly very negative. And I think global statesmanship certainly has taken a backseat if you look at the way the responses have come out of US. I think it's more been a Twitter and a social media kind of, face-off, basically. Thankfully, India has not participated in it. And I think it's not very, does not show a lot of wisdom on part of the US the way they are handling it. But I think the soft signal that India has given with this recent SEO summit, I think they made it very clear, that the regional blocks are getting stronger and stronger. Though not to debate the fact that US is an important market, will remain an important market. And we are not sure how much of front loading has already happened. I think perishables are something where we might see a lot of problem. Now he's even talking about, bringing pharma under the ambit that he also left out. So you're not sure with Trump really what he's going to end up with. The whole policy seems a bit.
Absolutely.
So, but that's an uncertain thing, and it's not certainly not good for either country. But yeah, I think you can hope sooner than later that most probably they will come down to the table and get into some negotiation.
Okay, got that. One more question that we're getting from one of our viewers, Sharad ji, is with respect to the festival season and which sectors are looking positive to you in respect to that. Preeti Singh from Chandigarh has written and asked about, with this festival season ahead, is the restaurant sector looking more attractive, or is the food delivery sector more promising at this stage? Now, this is also a very timely question because just today we've seen how Zomato has hiked the platform fee to take the benefit of the festive season on the back of surge in demand. We're also given to understand, some of the analysts are already back calculating for Zomato what would this mean. So just a 2 rupee hike, viewers, on the platform fee for Zomato could result in approximately 15 crore rupees, per month kind of an additional revenue that could come in. That could translate to almost 180 to 200 crore rupees of revenue per annum as well. So just with 2 rupee of a platform hike, that's what the kind of revenue bump up that we could see. So how would you address this question now? Restaurants or the food delivery giants?
I think restaurants certainly have not really flared up the way they should have now with this festive season. How much of that is going to culminate, I'm not sure. Though long term, I'm very bullish. I think eating out and going out is something that should keep going up in a country like India, the type of long term trajectory that we are looking at. But maybe, short to medium term, QSR probably remains your best bet. But you don't have many that have, come out with flying colors there. So I think, yeah, you can continue with these food delivery app. I think, as you rightly mentioned, the type of scale advantage that they can get, most of the additional top line really translating into bottom line. So I think that is an advantageous position. Within Eternal and Swiggy, I think I would still want to go with Swiggy. I have more valuation comfort there. So if you want to bet, I think Swiggy is a decent bet to take that place.
Okay, let's quickly look at the market closing then. It's 3:30, 24,716 is what we have as the closing level on the Nifty. We've managed to end near the high point of the day after yesterday, some losses that were seen towards the end of this session. Today, again, we are back into the green and back above the 24,700 odd mark on the Nifty. The Nifty Bank has also led this support towards the second half of trading action. You can actually see the chart, which has started to rally only after 1 p.m., 1:30 p.m. and therefore you see even the Nifty Bank ending near the day's high point. In contrast, it's the IT sector that has dragged today, 0.6 to 0.7% lower in trade, the only sector that has ended in the red today. Barring that, all the other sectors managed to pull up. The top moving sector today was the metals. The companies like Tata Steel, JSW Steel, even Jindal Steel and Power, Hindalco, Coal India, all of these metal companies were seen rising to the day's high point, which has pushed up the Nifty Metals Index to 3% higher in trade. Pharma companies were also higher in trade, about 1% higher. So names like Cipla were moving up. Piramal Pharma was moving up in trade as well. So those were some of the companies that shone bright in trade today again. PSU banks, that's the government-owned PSU banks, those were the ones that were also moving up in trade. Some consumer durables. Remember, we are talking a lot about GST. Tomorrow is when we finally get to see what is the final stamping on the GST rates. That can also ease some pressure on the white goods. Remember, this festive season, there are a lot of sales happen and most of you go out to do your purchases for air conditioners, refrigerators, for heaters for that matter. All of those white goods which come under consumer durables could get some, could see some bump up of sales and volumes because of the reduced GST rate. So all of those were up also. Even the auto stocks were higher in trade. Maruti Suzuki, look at even two-wheeler stocks like Bajaj Auto or a Hero, look at even Ola Electric, all of these stocks were also zooming ahead because of hopes of higher sales, of increased volumes in the upcoming festive season because of the GST rate reduction as well. Many other companies that continue to pull up were even the sugar space stocks. Remember, look at Ola Electric. It's up by 11.5% almost towards the end of the session within the auto pack. Sugar space, that's been on the buzz as well on the back of the ethanol relief that it's got from the last 2 days. We've been seeing a lot of buzz as far as the sugar space is also concerned. So that's how the market has largely shut shop at. Let me quickly go across to Sharadji and ask him to address one more question that we have from our viewers. This is from one of our viewers who's asking on a lump sum investment, Pratyagya Thakur. She's from Mumbai and she says, I have 3 lakh rupees to invest for next 1 year. I want to know whether I should opt for a SIP in mutual funds or should I park my money in gold or an FD? How would you advise this query as well, sir?
No, I think if you are capable of handling some drawdowns here and there, which markets can obviously face given the current scenario, I think go in with a SIP and go into an equity fund only, because gold might have performed very well in the short to medium term here. But long term, if you look at it, equities obviously perform much better. So I don't know your risk profile. So maybe if you have a high risk profile, you can go for small cap, mid cap funds. And if you have, a conservative profile, you're not comfortable with large drawdowns, then maybe you should go for a large cap fund or an ETF. And ideally do it through a SIP of 1 year. I think that should be good enough.
All right. Well, thanks a lot then, Sharadji, for being with us on the program, helping all our viewers solve their queries and giving us an insight into the markets. We'll see you soon on Business Today Television and on India Today as well. Well, viewers, you can also send us your mutual fund, asset allocation, markets and commodities queries to us on the number that's flashing on your screens in case you want to take expert advice on your investments. And also, don't miss the market opening show tomorrow morning at 9 a.m. with Abha Bakaya, giving you the first word on everything that will move the markets. And with that, we wrap up this edition of Business Today show. But before we go, here's a first look at Maruti Suzuki's brand new SUV Victoris.
Gurugram needs no introduction, but we still give it one.